Good morning, everybody. It is the 4th of January, 2023. Back on the screens. Welcome back, everybody. Hope you've had a fantastic New Year and holiday. And I wish you a very prosperous 2023. Taking a look now at the Dow Jones. Let's go to the news. We haven't had any news on Monday or Tuesday. It is Wednesday now. And today we have ISM manufacturing coming in. JOLTS job openings, they're both at 10 a.m. and then at 2 p.m. we have the FOMC meeting minutes. So quite a lot of impactful news coming in today, which is going to be fantastic, bring some volatility into the market. Right now, if we look at the daily chart, nothing much has happened the past, over Christmas and whatnot, and New Year's, except that we are holding above this bearish channel that we were in the entire year. So that is good news for the US economy at the moment. However, it can change, and today's an important day, especially with FOMC coming out, to see what direction we go in. Where do we go today? Do we continue pushing to the upside, or do we take this leg down and push through demand here at 32,500? So that's the daily chart. It's either going to go bump down here into 32,500 and kick out to the upside and continue its climb back up to 3,700 and beyond, or we're going to see it bounce off supply here at 33,500 and move down into the next region and continue moving to the downside for a few more months at least. So that's our daily view of what's happening. And now if we are to move down to the 4-hour chart, we can see here on the 4-hour that we've got these two areas that we're bouncing between right now. It's really 32,500 and 33,500 supply. So this is the range that's been working within since Christmas time. Nothing's happening during Christmas, so this tight range. And today is going to be interesting in terms of what our direction is going to look like for the start of the year. So we have supply here at 33,500, and it may go into that supply zone and then kick down to 3,200, or it bounces down to 32,500 and then kicks out to the upside. I'm targeting 34,500, 35,000 or 34,750, that zone here. So down and kick out, up or kick down. Zooming in a little bit more on that in the 1 hour, just have a look at what's happening. We can see that we did have this bearish channel here that was taking place. This bearish channel here from point 1, point 2, moving to the downside. It has come out of that into this channel, into this range channel here, and now we see that the options for us really are for it to come down into liquidity here at 32,600, kick out to the upside again, targeting 34,800, or moving up into 34,400 to 33,500 in this area, and then kicking down and continuing that bearish channel, bearish downtrend, because we still are in bearish movement at the moment. We have a lower low and then a lower high here. So expectancy is the next lower low. However, it could just be holding at this level, and then we kick back out and resume the uptrend on the S&P and the Dow Jones. So interesting time today. See what happens for the new year. What are we going to do? Where are we going to go with FOMC? We will get some movement. We will get some drastic movement, and that's going to be fantastic. So waiting for that surf to come back in the market and just get some trading going. On the 1 minute for today, if we look at yesterday, just working the demand zone, same demand zone. Okay, remember they work. Here's a demand zone to the left. It works the same area there. That's where our trades can take place. Look to the left-hand side. Again, look to the look to the left-hand side. Here's our supply zone. It works it there. Where's the next trade coming to? Where's it going to reject off? This area. Okay, so we're going to get a trade here because we think we're on a downtrend. We might be able to extend that, take profit a little bit, and squeeze a bit more out of it. And again, down here on the downside, the area where there is guaranteed demand is really down here. Okay, that's where the zone is that I would be confident in taking a trade to the downside. So they're the areas that we're looking at for our orders. okay, and we're just working this this band region just as our volatility. Okay, so that's our average spread of volatility there, and we're looking to take a trade in this area here or a trade down here. Remember, if it goes against you, if it keeps pushing to the downside, wait for it to come back and get out and break even. Okay, again, if it pushes too far to the upside up here, to let it turn around and come down and break even. Set your alerts around here. Okay, just something around here. If you can't beat the screen, just put your alert up here, so you know where price is. That's your supplier alert. It's the next level up. So this, if you have a trade here and it's still open, you can look to get out of that trade. And again, down here as well, something around this region here would be where the alert is. I will be talking to you guys about what we're going to be doing next, and it's about putting a record in for the next 3 to 6 months, and also next steps around getting capital. But let's just get trades down. Don't be afraid. Put them down. You know, just practice that. You know, patience and the focus and less is more. But you know, knowing that if you just get 1 or 2 of these a day, that's all you need. You know, and really trade the good setups. Okay, make sure you are wary of news at 10 and at 2 p.m. And you know, make sure you let news tell you what's happening, especially FOMC. I would be very wary about having any trades on during FOMC. I will not have any trades on or any limit orders on during the news release. Okay, never have trades on during the news release. Let the news release come in. If the news release where it's dangerous is it'll just smash in a certain direction, you know, within minutes, and that's when you can get you know, blown out or whatnot. So wait for news to come in, see how news is respecting, you know, working within the market. If it's grinding or if it's smashing. If it's smashing, stay out. If it's grinding, then you can look to place your limit orders in. Right now here, just please notice that we are in the center area of the chart. So we're at the median. So if it does kick to the upside through here, directly straight out of here, I would be very wary of taking a limit order trade here. I need price to come back down to this area first, then kick up there and wipe the entire area of this band region for me to want to take a short trade. Likewise, for me to want to take a long trade down here. Okay, if it just kicks out of the center here and goes to the upside, I dare say it'll probably continue moving up to this next region here. So just be wary of that. Anything that kicks out of the median zone, I do not want to be trading the band area. I want to let it move through this area of supply and look for the next area of supply, which we can just easily look at across here. If we put that in, the next area of supply to the left is, well, yeah, we can't see that at the moment because we don't have enough data, but it's obviously where this red line is that I had previously in. So you could look to take another trade. You could look to take a short trade up in this area here if it kicks directly out of the median. Okay, that is the you know, here it comes up down here. We can then take a trade that once it moves down to the bottom of the bands. But you know, if you see it kicking from here, it moves through this area, it continues to the upside before turning down. So when it comes out of the median, it needs to make a movement of this bandwidth, right, before it turns around. Likewise down here, if it happens here, if it kicks out of this area, it needs to move up to this area at least before coming down. So just be mindful of that. And yeah, happy trading. Let's get back into flow. Look forward to talking with you guys today in the group, and course updates are going ahead, and I'll reach out to you separately about catching up. Thanks a lot. Have a beautiful morning, and talk to you very soon. Cheers.